crypto markets are under pressure once again, and XRP is no exception. After hours of steady bleeding, XRP is now trading at $2.18, down over 7%, and the rest of the market is deep in the red too. Bitcoin has dropped to $83,000. Ethereum has fallen below $1,900, and altcoins like Solana, XLM, and HBR are also taking heavy hits. It's a day marked by intense liquidations and uncertainty. And there's more going on behind the scenes than just price movement. So let's break down what's happening. First, we have major headlines coming out of North America. The FDIC, one of the key regulatory bodies in the U.S. banking system, has made a move that could quietly change everything. Banks in the United States are now allowed to engage in crypto activities, including using assets like XRP, without needing prior approval from the FDIC. That's right. Traditional banks now have a green light to interact with cryptocurrencies, including payment processing and settlement, without getting the go-ahead each time. That alone is a powerful signal. When you combine this with the fact that XRP is one of the few ISO 20022 compliant tokens specifically designed for banking integration, it paints a very clear picture. While price action may look chaotic right now, the foundation is being laid for long-term adoption. And it's not just XRP. Other ISO-aligned tokens are standing to benefit from this shift too. Meanwhile, geopolitical tensions continue to influence market sentiment. Just days ago, Trump and Canada exchanged sharp words over tariffs. Now, suddenly both sides are talking calmly again. One day it's conflict, the next day it's peace talks. The narrative flip-flops aren't just confusing. They're fueling market manipulation. Massive swings in sentiment allow insiders to make moves while retail investors get caught in the middle. This back and forth isn't accidental. It's part of the same old playbook. And then there's the PCE inflation data. The number came in slightly hotter than expected, 2.8% instead of 2.7%. But that small difference was enough to shake the crypto and equities markets. Over $1 trillion in value was wiped out from traditional markets today alone, and over $421 million in crypto liquidations have followed. In the midst of all this chaos, Tether minted another $1 billion in USDT. Once again, new stablecoins appear right when Bitcoin begins to collapse. No audit, no explanation, just liquidity where there was none. But even through this turbulence, XRP continues to make progress. Interactive Brokers recently added XRP to its crypto trading platform. The probability of a spot XRP ETF approval in 2025 is now hovering around 87%, according to Polymarket. And Paul Atkins, Trump's pick for the next SEC chair, is expected to take a much friendlier stance on digital assets, pushing for clear and solid regulatory frameworks that could finally end the uncertainty. To top it off, Ripple President Monica Long has confirmed that Ripple Dollar, the company's stablecoin, is being rolled out across more exchanges. This kind of expansion is exactly what strengthens XRP's use case as a bridge asset for payments and liquidity. Despite the sea of red in today's charts, these updates show a market that's transforming under the surface. Banks opening the door to crypto, regulatory clarity coming into focus, and Ripple expanding its ecosystem all signal a long-term path that's becoming more defined by the day. If you're feeling discouraged by the price dips, remember this. Short-term volatility often disguises long-term opportunity. That's why it's so important to stay informed, stay sharp, and keep your perspective wide. Let me know in the comments. Do you think XRP can weather this storm and emerge stronger? Are these recent policy changes enough to turn the tide for crypto? I'd love to hear your take. Drop a like if this breakdown helped you make sense of the market chaos. And make sure to subscribe so you don't miss the next big shift. See you in the next update.